Good morning, it's Jeffrey Cohen, Chicago Quantum. How are you? Today is May 3rd. We're going to talk about the markets. So much to talk about. We did our run yesterday, we updated our website. We're going to start with some data that we shared on our website. So the way you find our website is you go to www.chicagoquantum.com. Pretty easy. So we published negative beta stocks versus the S&P 500. There are very few. There are 6 of them. 6 negative beta stocks. That's it. There used to be a lot more. And these are stocks with positive net income. So you see Newmont Mining is almost zero. Forge is a meme stock. It's gone crazy. IHS, I don't know the story. Negative income stocks. FATH is a meme stock. It's a crazy stock. And this one I don't know the story of. But what's interesting is look at the commodities and derivatives, right? So you have Vixi and UVIX, which is -6, -4. Great way to bet against the market. You got your SQQQ, which is a great way to bet against the market with leverage. And then you've got your dollar, US dollar index, which is negative. We talk about this in a lot of our videos. The US dollar index is generally a contrarian indicator. Same thing with physical gold. It's only 8%, but it gives you some leverage. So there you go. Negative beta. So, Jeffrey, what are your top dividend stocks? Well, let's take a look. And by the way, we'll have to update it with today's video. So, some stocks pay a consistent dividend. We love it. Other stocks pay dividends on a one-time basis. Some investors prefer stocks that pay dividends. I'm not sure that we do. I don't really think about it. Double taxation on dividends could cause a tax on a highly taxed individual of 58% of every dollar earned by the corporation. There's ways to avoid double taxation. So this is why companies don't always pay a dividend. Our list of high-quality dividend-paying stocks have 5 attributes. This is important for you to know. This is how we pick our dividend stocks. They're U.S. listed. They trade every day. They pass data validation. They're profitable. They have an efficiency score or a smart volatility score that's better than the S&P 500 index ETF. And finally, the dividends paid are better than the S&P 500 index ETF. There are no stocks that meet the criteria today. Please check back soon. So there's no dividend stocks to buy today. Don't buy today. There used to be 9 of them. Here's 5 stocks that come close. So I figured I might as well share something, right? Because people want to know. They didn't come to the website to do nothing. They want to buy something. So let's show you what we found. We found the Carlyle Group. We found Blackstone Group. We found Ameriprise Financial and BlackRock. Those 4 are money managers. So money managers do well when the stock market goes up. Lots of activity. They get M&A activity. They get IPO activity. They get assets under management. Their hedge funds make money, and they make returns on the money they invest. Broadcom is just one of those solid tech growth stocks, and that also pays a nice dividend. So if you must invest today, let's say your state of Illinois pension plan, these aren't bad. They're not suggested, but they're not bad. So there are other things on our website that we share. So let's take a look. And this is important for you because this is data that we put out all the time. High and low beta stocks. There aren't many. Now on the down run, you see the triple bull for small caps. That's fine. The rest, it's interesting. You still have your Bitcoins. Mara, Riot, not many. Upstocks, you have your TNA again. Silvergate, which is Bitcoin. Hut. And then you have other stocks. These stocks, many of these stocks end up showing up in the efficient run, not all of them, because some of these also have very low volatility relative to the beta. So you get your beta exposure with low volatility. Downrun beta, so these are small betas, tiny betas. You can see Tidewater. Okay, one stock with a low beta. So money losing stocks in this market right now are not safe. By the way, I know that. I have one of them. I'll show it to you later. In fact, if you call me, I could send you a private message of our small cap money losing stock. So uprun stocks, though, this is where it gets interesting. There's some. Clorox, Barrick Gold. These are names you know. Kellogg. By the way, Kellogg's beta's been going up. It's hard to escape the market. Lockheed Martin, Hormel Foods, Kimberly Clark. So, Yamana Gold, JM Smucker. So, not every one of these is a low-risk stock. Some of these trade independently of the market. So as an example, and this is probably worth a short conversation for you. ARQQ is a high-risk, UK-based quantum computing security company. So think ID Quantique, think quantum key distribution, think system integration, right? So they have a very low beta. It's because the stock trades based on people's feelings about quantum. It doesn't trade based on the S&P 500. There are others like that. So you can't just kind of arbitrarily buy these. Green Giant is not the food company. It's a meme stock. It is a crazy, stupid stock that has really bad fundamentals and is memed. Right? But it's a low beta because it's so independent of the market. So my guess is Kinetic is the same thing. So low beta could mean not influenced by the overall economy, like Lockheed Martin, like the public utility of New Mexico, like Kimberly Clark. People need to wipe their backsides and blow their nose, right? It's fine, right? Kroger. People need to go to the grocery store. Pfizer. People need drugs. Campbell Soup. You're hungry, right? So I want you to think about it. Low beta stocks could be a way to build a portfolio that's safe during a down run if you have to invest. We're going to talk about that whole, Jeff, what do you mean by fear of missing out is a cheap strategy? So I need to type that for you somewhere. Let's do it. Fear of missing out is a cheap strategy. Let's do it right here. New window. Fear of missing out is a cheap strategy. You can afford to wait. What we mean by that is that there's lots of stocks, especially money-losing stocks, but even money-making stocks. There's a lot of stocks out there. There's 11,000 plus that traded yesterday. 11,000, Jeff? 11,000. You kidding me? No. So the stock market's down. It's down. Down, down, down in the dumps. Look at that. Actual S&P 500 return plus dividends is 2%. IWM is probably 16% minus. And QQQ is probably minus 4.8 inclusive of dividends. Market's down, right? So hey, how many stocks are there? Need to show this to you because we look at a lot of stocks, a lot of tickers. 11,373 stocks traded yesterday. Okay? That's a lot. Data validation allowed 2,166 to go through our model. 1,977 made it through the model. And we gathered 253 days of trading data. That's the shape of our matrix that we then optimize. Okay? The CQ&S power of our model, which is the relative strength of the expected return versus the variance, is under 3. I remember talking to the Federal Reserve Bank about our model almost 2 years ago, and it was about 3 when the market was crashing. So, market's down, right? What do you mean, Jeff? So, this is what I mean. Fear of missing out is a cheap strategy. You can wait. Just take your time. It's okay. Whatever stock you think that you gotta have right now, you don't have to have it right now. You can wait. Just wait. I love it. Here, I'm going to send this tweet, and I'm going to pin it to my profile. Just wait. Wait it out. I believe this fundamentally, okay? This is important. This is probably the most important thing I'm going to tell you today. So what else was important? There's so much data that I'm going to throw up. So, FinViz, you know what happened yesterday. The markets had faked up, down, up. Up, down, up. And we're talking about ranging from 40.80 to 41.55. That's 75 points. That's almost a 2% range. That's a really high range for the S&P 500. That's a really high range. And advancers, decliners were about flat. It's a crazy market. Oh, here's another thing. We did a little homework for you. Armstrong Flooring. Debt default coming. May 8th. That's why the stock dropped. Debt default. Just stay away from that. That probably goes to zero as the creditors take over. What else was interesting? Futures. I always look at the futures. They don't mean anything though, right? But they're interesting, right? So take a look. Plus, 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 plus. Stocks are up. VIX is down. By the way, this is all bullish so far. Oil's down. Well, that's pretty good for the economy. Look at that. Yields are down. Bonds are up. That's good for the market. Gold and silver. So gold down, bullish. Silver down, not so sure. Copper up, bullish. US dollar down, bullish. So of everything I just told you, pretty much everything was bullish, except for a little bit of silver being down. But honestly, I think there's some issues with silver. I think silver is in a sell-off until it hits its support level of under 22. So my guess is silver will test lows of 21.50. By the way, we like silver. We think it's testing some lows, right? And so we like silver testing lows. I don't know what to tell you though, right? So if I were to say silver's testing lows, I like to give FinViz credit. So silver's testing lows. We'll keep track of that. So what else is interesting? Crypto. Maybe later. Crypto's flat. It's neither bullish nor bearish. We look at the market for the week, the month. This has been a bad month for the stock market. Just remember, things are probably going to get a little cheaper. Fear of missing out is a cheap strategy. There were some stocks, though, that were moving up and down that we thought were important. So Kimberly Clark, I probably should be putting this stuff on the website, but I don't really care. I don't have subscribers. I don't charge. This is just, we do charge for our main services, which is we run quant models for institutional investors or wealthy individuals. So Kimberly Clark dropped because they weren't able to raise prices. They didn't think that they could sell enough diapers if they raised prices. Well, guess what? They must have figured out that they could raise prices, because then the stock jumped from 120 to 145, which is crazy because this is a stock that doesn't really move. Now it's coming back down again. These patterns work until they don't work. TNA. This is the number one top pick for efficient, smart volatility in the market. So the reason is because it's flat. Look at that flat. Flat over here. Flat here. Flat here. It's flat. You get a lot of beta. You get like a 3.15 beta. What kind of beta we have? 3.41 beta. But it's flat like my arches on my feet. And so, all right, it's going down. If the stock market were to go up, then this would go up. So this is a pretty cheap way to invest in a stock market recovery. The other is TQQQ. So this is small caps. This is QQQ. So this is your tech, your growth. This is these guys. So if you like those kind of stocks in your portfolio, then you want the TQQQ. This one is not as efficient from a risk perspective because it goes up and down so much. It head fakes like crazy. And so, sure, you could have sold it short. Sure, you could have bought it here. But, I don't know. I just think you got to be thoughtful about how you invest. Now, the Vixi, this one's interesting. The Vixi has got negative beta like crazy. Look at that. The Vixi has a negative beta of 4. Negative 4. The UVixi is a negative beta of 6. Wow. Okay? I want you to think about that. Negative beta of 4. So here you go. You got your model, right? You want to invest in volatility. You think that volatility is where it's at. Right now, volatility's up. Maybe a little down, but it's up. VIX is up, right? And so it's fear. So you say, I want some of that in my portfolio. Now, if you would have bought it down here at 15 and you would have sold it at 20, you'd be feeling pretty good. 33% return in just a couple of days. So, yeah, it's risky. It's okay, though. It's there. It's there for you. Let's take a look at Verizon. We love Verizon. We don't own it. We use Verizon on our phone. Look at the correction. This thing has been trading in a range for a long time. Up, down, right around 50 to 55. And then it just crashes through the floor. If you look at FinViz, the dividend is up to 5.54%. P ratio is under 10. Look at that. But here's the problem. The problem is that while you waited to earn that 5.5% dividend, you lost 20% on your money. Don't ever forget that a dividend doesn't mean that you make money. You would have bought this thing at 50, you would have been like, I'm earning a 5% dividend. I'm going to retire. Well, now it's 46. So do you double down at 46 to earn 5.5? Fear of missing out is not expensive. Okay, Walmart. By the way, love Walmart. Love Walmart. We bought an air mattress. My daughter needs an air mattress, a twin air mattress. We bought the air mattress for $30. We bought sheets, a whole set of sheets for like $10. You know, we need a pillow. They're $3.50 at Walmart. Okay, love it. I love that I can walk into a Walmart and be surprised that everything I need is in one store. So the stock goes up. And by the way, part of the reason the stock went up is they're replicating the Amazon strategy without AWS. They have something like 150 million items that you can buy at Walmart.com. I tested it. There was a fishing shirt I liked. Down in Tennessee in Gatlinburg, I bought the fishing shirt because it was a UV ray blocking. Loved it. Paid $18 in the store. It was online $15. That's great. Free shipping if I bought like $50 or more. So, goes up. But by the way, Amazon's going down because people aren't buying online right now. Economy's a little tough. So there goes Walmart. So stocks that break trend, I don't know. Like here's HP Enterprise. By the way, we love HP Enterprise. We love the company. We love the company. I could go to work for HP Enterprise. I love the company. Love the company. Green Lake, great strategy. Love it. Look at those tops. Top and bottom. Top and bottom. What is going on with HP? So if you're sitting right here, you're thinking, well, it's got to go up, right? It's got to go up. It goes up and down, up and down, up and down. Oh, boy. But then just take a look at Kimberly Clark. Up and down. Oh, boy. It doesn't always have to go back up again. These strategies, these trend strategies work until they don't work. Personally, I'm bullish on HP Enterprise. I think you should be too. But I don't know about the stock at this price. I'm thinking about it. Do I have any questions? By the way, you can type. I like questions. I really do. Give me some comments, something I can respond to. I feel like I'm just talking to myself here. So there's some other things I wanted to share. These are futures. So, Jeffrey, what does the future hold for me? Tell me my future. I hear this all the time. Usually I hear it from my 13-year-old, 12-year-old daughter, or my son who's 18. By the way, graduating June 6th. Yes. Going to work for a military contractor. I love it. Love it. Get a job. Go to work. Making money. Starting his life. Love it. Love the story. So the futures are up a little. That's nice, right? Silver's now up a little. So that was my worry. Remember, that was my one negative. So market's bullish. Market's bullish. I love this market, right? Today, the market is bullish. How are world indices doing? Let's take a look. So the VIX is down. That's bullish. The all ordinaries was down. South Korea was down. The Nikkei was down. So overnight was down. Hang Seng was flat. Now take a look. The DAX is up. Belgium up. France up. Merval's up. I don't know what's going on with China. I don't know that traded, but because it's the same number I saw before. But things looking okay. Euronext is up, so Europe's up. Asia was down, Europe's up. There must be some news somewhere. It's moving markets. My personal investments, just to be disclosing, is I am down 41%. AMS, Corbis, Summit Midstream Limited Partners. By the way, I love all three of these stocks. I will hold them to zero if necessary. Call me a fool, call me a sucker, but for my own personal play money, this is where I'm at. I do believe Corbis is going to break $1. I do believe AMS is easily a $3 stock, and I think SMLP, giving it to my grandkids. So I wanted to talk about a few things with inflation. So Clorox is jacking up prices again. That's okay. Kimberly Clark will raise prices. Amazon will raise prices. The retailers will raise prices. I'm not worried that they'll raise prices. I'm worried that they won't raise prices and that these companies will go out of business. And so When I see Clorox raising prices, I'm okay with that. And I think you should be too. So this is how we look at our Twitter. This is how we look at our tweet deck. What's interesting is all the Corbis tweets are gone. There must be some news or something. There are no recent tweets on Corbis. That is not true. And the only things that are posted on Corbis Pharmaceuticals are job postings. So if you're out there, I think you know there's a problem. I love this. Twitter's top stocks. AMS. What, are you kidding me? Very positive. Come on. The only thing positive about AMS, and I will tell you that this is very positive, is the joint venture for radiation therapy in Puebla, Mexico. So AMS sells radiological equipment for cancer treatments, and they make good money because they typically go in on the equity investment. They have someone else to operate, and they get paid based on surgical procedures using the equipment. So this is going to generate some good money for them. I like it. I don't know why there's memers out there. I think it's crazy talk. So Corbis is up pre-market. If you like Corbis, you're going to really like Corbis. The thing I wanted to point out is there's a lot of option activity that showed up here at dollar calls for a nickel. 50-cent calls at 15 cents seems high, even at 10 cents. Maybe it's okay. But buck calls for nickel, they bought 100,000 shares worth, they paid $5,000. Feels like a good risk reward. Buck calls, 1,285 are outstanding for 6 cents. May also be a good call. So people are betting on Corbis going up. AMS doesn't trade, thinly traded. Summit Midstream Limited Partners, look at that, up almost a buck pre-market. We like that. So I'm not pumping and dumping. I'm just pumping because I like it. And then you see pre-market, Verizon's up 4 cents. Come on. That's crazy talk. And Hewlett Packard's up 7, which is like 0.5%, which is something. It's nothing to sneeze at. So I wanted to show you something about CoiFin. We have not used the CoiFin website in quite a while now. And so I wanted to share with you a few things. The first thing is fixed income. So there's a couple different ways to show it. But take a look at the negative fixed incomes, right? They're just down in the dumps. That's one thing to look at. Fixed income's down. By the way, we know that, right? Because yields are up. Momentum is up. That's our Chicago Quantum Net Score has momentum in there. Low volatility is down. We do publish some leptokurtic stocks that are low volatility, low variance. And you're right, they're not doing well, right? People are still jumping back into momentum whenever they get a chance. And then in terms of size, I always find this interesting, right? Large cap growth and small cap growth. So they're suggesting that it's growth versus value. I'm suggesting it's large cap versus small cap, but actually, again, what we see in the model is that the growth stocks are showing up as having been relatively flat. So that's interesting. A couple last things to share. So it's not going to be helpful to show it there. What else can I show you that's publicly available in the market? So we might just wrap this up. So let's go back to FinViz futures. We'll leave it here. So we're entering into the market today with a lot of bullish sentiment for U.S. equity prices. It doesn't mean that it's going to go up, but bullish bullish, 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 bearish, bullish, bullish, bullish. Okay? Look at that. Buck 561. Crypto being down 0.2 doesn't matter. Not relevant. In terms of news, we can always take a look at what the news is saying. Stocks seesaw as Federal Reserve meeting begins. Maybe that's another thing to talk about real quick. The FOMC meetings are happening now. And there's going to be a press conference. So it's very important that you keep up with this. Because the Federal Open Market Committee meeting, and this is when they talk about both interest rates and they talk about the taper, or running off the $9 trillion of assets that they have. And so, let's be honest, none of us really know what they're going to do. We can all guess, but this is very important for the market because I do believe that this is a liquidity-driven market. So, thank you very much for watching. I really appreciate it, and I hope you great luck in the market today. Bye-bye now.